before we get into it, I'm just going to go rapid speed to explain a few things.
The Finsightful YouTube channel provides educational content only. All information shared by Finsightful, Matthew Brown, Nathan Moss, or any guest reflects personal opinions and is not financial, investment, tax, or legal advice. Viewers should do their own research or consult a licensed professional before making any financial decisions.
Okay, rapid fire over. Let's get into it.
All right. Oh, I've got my glasses on. Hello, everybody. Welcome back to today's market scan, the 2nd of July. Just following on from my market scan last night, which was a happy financial new year. Good to see all that behind me. So a couple of things happened overnight, which have sent crypto markets into a bit of a tailspin. So we had Trump and Elon Musk start going at it, which I'll go through that in a second. But also we had Jerome Powell come out and speak on behalf of the Fed. And actually, hearing Powell speak should have been quite positive news to financial markets and crypto, because what he was reiterating was that the US economy is in a strong position and that they are strongly considering that interest rates are going to decrease towards the end of this year. So he went on with tariffs and monetary policy, saying that the Fed would have likely have reduced rates by now if there was less uncertainty about what tariffs were going to do. But on that being said, well, regardless of what he think may have happened from tariffs, inflation is at all-time lows in the US. And that would mean that you would definitely have the gate open for interest rate decreases to come through. And that their approach is going to continue to be data dependent. So they're going to continue to have a look at the information, the economic information that's going to be flowing through on a month-to-month basis. And then when they meet every 6 weeks, make a decision on what they're going to do with rates. I do believe that rates will probably come down at the next meeting. He said that there's a July rate cut is not ruled out, that the US economy is in pretty good position. We've already sort of said that. And that housing costs are going up because of those higher interest rate costs, or because of those higher interest rates. But the consensus is that, look, there's a solid majority of the FOMC governors who are voting towards that interest rate reduction. So we should see some of those interest rates in the US start to come off, and that is going to provide even more liquidity into both equity markets and also growth assets, so crypto markets and US property. So we should see a lot of those growth assets increase in value. So so yesterday we had Elon having a dig at what's going on here, and he's sort of saying, well, what's the point of having a debt ceiling if we just keep on raising it? Well, that begs a very important question. So as a governing body, why not just say, look, we're happy to raise the debt ceiling to 100 trillion and just be done with it? Why do we have to continue every year to have this stressful event where they're not bringing the budget back in order, they're spending more money than what they're earning, and they are continuing to go further and further and further in debt? So you either make the decision where we're like, okay, well, this debt ceiling is actually ridiculous because we increase it every year, or we're going to actually make a concerted effort to actually reduce spending and increase tax revenue. And Elon's just sort of going on to say, look, all I'm asking is that we don't bankrupt the US, and hitting the debt ceiling is the only thing that will actually force the government to cut waste and fraud. And the biggest issue I think that we've seen from Doge coming out and the research that they've done is the absolute fraud that is rife all through the government in the US. And I would have it to say is that this is not just a US problem. This is a Western world problem. It's probably a global problem, because when you have a resource with unlimited capacity continue to provide more funding, which is US governments, Australian governments, UK governments, because when they just need more money, they just go out and get it. Then there's no requirement to balance a budget. One of the primary differences between the way that for-profit organizations work and how governments in the Western world work is that if you have a budget in a for-profit business and you meet budget or you excel, so you spend less and you earn more, then you are rewarded by your share price going up, by you getting a bonus. And this starts from running a little small team to running a multinational corporation like Apple, Google, CBA, Westpac, BHP, etc. But on the flip side, if you are in a government organization and you have a budget for the year, if you cut costs and you save money, then next year when you go back and ask for the same or more money, they won't give it to you. They will only give you the amount that you spent the year before. Because you have efficiently and effectively and profitably run your business unit, you get less money. It's completely counterintuitive to the way the rest of the world works. And I think what you'll find is the public-private joint ventures that have been going on in China is why you have seen that economy over the last 50 years rise from being basically the third world to being one of the top 3 economies in the globe. Not only in terms of educated populace, but the standard of living for the average person who's living in the country, to the profitability of their publicly listed companies, to their education systems, to their healthcare, to the way that how quickly they can build roads, how quickly they can build hospitals. It's a very, very different mentality of how those business units and the structures are run. Now, do I believe that government should get involved in business? No, because the way that currently the governments are run is audacious. But there's got to be a better way, because you can't continue to be running budgets, for example, an education budget, where if you don't spend all the money, you don't get it back the next year. There is no benefit for you to actually there's no benefit for you to spend less money and deliver services more profitably. Governments are not about profit, but at a better rate for the taxpayer. Because at the end of the day, this debt, this money that we're spending, yes, it's going to be our problem. I'm 45 years old. I've got a few years left to live on this world. But the biggest problem it's going to be is to my grandchildren. It's for my children. And if we continue to run deficits over and over and over again, then we will eventually bankrupt the US, the Australian government, the Western world. And then where will we be left there? So that's my bit of banter going on, get off my soapbox on that for now. But it's a real problem. And I actually feel really strongly about the work that Doge was doing and about cutting government waste and corruption and overspending. The whole thing needs to be reworked. What's the solution? I don't know. I was watching a podcast by Bernie Sanders and Joe Rogan, and they both brought up some really great factors about, we should have universal basic healthcare. We should have free education. We should have all of these different things. But why don't we? And then how do we fund it? So, and the answer is like, there's no simple solution. But the guys in Saudi and the guys in Qatar, like, they found a way. The resources are not owned by multinational corporations. They're owned by the country. And there is a significant profit distribution that comes from those oil and natural resources. I think it's same in Iceland or Denmark or one of those Nordic countries, is that they have built up such a large sovereign wealth fund so that everything is funded by the profits that this sovereign wealth fund has created over the generations and generations of, I think they have natural gas and oil profits coming into that particular fund. So similar to what we've done in Australia with the Future Fund. So when we sold Tesla, when we sold Telstra, that was a public company, and it was a public-private owned. We floated Telstra, and then all of that capital paid off all the debt that the Australian government had, and then invested all the surplus into the Future Fund. And then so the Future Fund has been set up to then be an investment vehicle so that future government employees' pension payments will be funded through that. And so you think of police and all of that. So that's how that was that. But why Why aren't all of our gas profits and revenue going into that future fund? Why isn't all of our coal? How did it become possible for us to dig iron ore out of the ground, put it on a boat, ship it to China, they create steel over there and ship it back to us? There are so many other people making profits along that chain, and the Australian and Aussies are getting ripped off. So definitely this is something that you should look into, and as you can probably tell, I feel quite passionate about. So what's been going on in the crypto world? So we've had a massive sell-off overnight. It's red everywhere. Pengu's actually had a bit of a bounce back. Their community's actually been really, really strong, and I'll have a look at a chart of Pengu in a second. But yeah, it's red everywhere. We've had a really big sell-off, and like I mentioned yesterday, is that a lot of these coins that go up at a greater velocity when we're in a bull market, they also sell off at a greater velocity. So when you think like BTC is off 2%, Fartcoin's off 11, SPX is off 10, WIF is off 8, Jupe is off 8. So when you're dollar cost averaging into a portfolio that you want to hold over the long term, you've got to stick with that core OG digital gold asset. You've got to really have a large allocation into that. And the primary reason why that, and the primary driver for you, should be simply that institutional money is flowing into Bitcoin like we have never seen before. And that is going to continue to prop up the price and continue to drive that price higher. So having a look at the fear and greed, someone asked me the other day, what's the difference between the CoinMarketCap crypto fear and greed index and some of the other fear and greed indexes that are available online. So there was a Bybit one, there was one by CoinGlass. And so I'm actually going to be moving from using this the crypto market cap, the coin market cap fear and greed, and moving across and actually having a look at this one here at CoinGlass. And the reason I want to look at the CoinGlass is because they're aggregating information across all of the centralized and decentralized exchanges and having a look at open interest. They're having a look at liquidations. They are giving us a lot more information in terms of where the crypto fear and greed guide has been historically, and then also some indications as to where it is potentially going. So when we saw before, CoinMarketCap was basically sitting directly in neutral, where here on CoinGlass, we're sitting in just greedy. So neutral's from anywhere from, I would say, 45 to sort of 60, or 40 to 60. In here, so 40 and 60, yep, thereabouts, so 50. Whereas at the moment we're sitting at sort of 63. But interestingly, what it also does is it tells us over the last 12 months where the fear and greed has actually sat in these different areas. And we can just look at that and look at a week. So it's basically sitting in neutral and greed. So what we're saying is we've had a bit of a bounce in terms of this indicator, and this we'll see that by the unit prices of all of your major cryptocurrency investments. And we can have a look at it a whole lot of different time frames, which I think that's really great. Another thing that we should be looking at is like liquidations and where the liquidation positions are. So this is where we can see whether the bulls or the bears are in control, but also if the bears continue to control the market, how much more downward selling pressure is going to then initiate a significant amount of liquidations. And so if we have a look here, we've got the price, and then as we started to hit these areas where there was going to be significant liquidation, we actually saw price decline again, significantly coming down, and then now we sort of bounced back, and now the shorts will be liquidated here and the longs will be liquidated here. So if price comes back up, here are all the short positions that will be liquidated. So you could definitely see a liquidity sweep back up here to sort of 108, and then get rid of all of these. But there is a whole lot of buyers or long positions in here that will be liquidated if price continues to fall. So it's going to be interesting to see how what price action happens. It's 11 o'clock now. The Asian market is just about to open. I'd probably suggest that Asian market will push back a little bit higher and try and retest these areas around about that 106, 107 before potentially moving lower in London, or it could come back down here and sweep out all of this long liquidity that's there before then retracing and then heading north again. But we're definitely in a downward trending market. What I wanted to also introduce you to is this Pernille multiple status. And so what this is a calculation of what it costs a Bitcoin miner to create a new Bitcoin. And so what we see here is that if energy is very, very cheap and the Bitcoin price is very, very low, well then it's going to be, so if the energy price and then it's going to be undervalued. And what we're looking at is a moving average. We're looking at 111-day daily moving average, and whether that is sitting above or below the 350-day moving average. And so for us to be in a position where it's overvalued, we're talking about $170,000 Bitcoin. So the bull market will continue to fire off, or Bitcoin miners will continue to mine because it's very, very profitable for it to do that. Obviously, if this price continues to go, if this price goes higher, then it's got a long way to get to before it becomes overvalued. What I also wanted to have a chat about here is just having a look at this rainbow chart down here on Bitcoin, and just having a look at where we currently are. So if we have a look at historically where we started with down here, the price of Bitcoin has trended within this sort of rainbow for the entirety of its life cycle. And so what we're saying is that towards the end of this year, we could be pushing towards, you know, 200,000, 300,000, 400,000, $1 million Bitcoin price into the future. And whenever we see the Bitcoin price drop down into this sort of blue area, so if we look in the last 30 days, when we ever see, I'll get a better example of that chart and actually do a complete video on just explaining that. But this is a really good indicator. Also, having a look at these crypto market indicators to identify whether we're at the top of the cycle. So there are 30 of these available. I'll go through each one of them individually at another time, but this is just on CoinMarketCap, and not a single one of them is telling us that we are anywhere near a market top. So we could be seeing a extension of that sort of 4-year cycle. We could be pushing more towards sort of that 7 to 8 year or even 11-year cycle, which is more in line with the majority of other growth assets like stock markets and property markets, etc., and debt cycles. Winners and losers, there hasn't been much happening on the winners side. I don't think there are very many, so we even had those drop off. So in the last 24 hours, there's 3 winners, which is not a good sign, but we've had a massive sell-off in terms of those losers there. So what's going on? Let's have a look here. So an update on the PTS system. I'm going to be running the PTS system live, and so I'll be showing everybody the live account, which will be running the Insightful Wealth portfolio. One of the first trades that we had fire off was Ronan, picked up a short yesterday afternoon, US time, 4 a.m. And then it basically sold down. It hit its first profit and it's continued to trend lower. So this is a very, very profitable trade, which we have, which is the first one up. And we're just waiting for, so this trade won't actually exit until this trailing stop starts to come down here and price retraces. So if we continue to see price decline, we'll continue to bank more and more profits on there. Another one that's been performing really well lately is Render. So we had a long last week, which performed exceptionally well. And then we've had 2 shorts being picked up just recently. If no one explained to you how this works, so we have an entry here. The yellow line is our entry signal or our entry price. The red line is our stop loss. and we have the white line, which is our first profit target. We usually take off somewhere between 25 and 75% of our risk once we hit this first profit target, and then we trail price down, and then we exit once we get a close above this trailing stop. So this trade here should exit with both of these profitable because our trailing stop is below, is significantly below our entry price. So that's what's happening with PTS. Since we've done the latest upgrade with the PTS 3.0 code, we've been getting some exceptional quality trades coming through, and my account is very profitable, which is good. This is a discretionary trade that I put on last week, at the beginning of last week, and this is the roller coaster of that sort of longer term swing trading and momentum. Up here, this trade was about $5,000 in profit, and then so we're back down here, and now I'm about $500 in a loss. Having a look at this chart in hindsight, I probably could have exited in through this area. And the reason I say that is because when I'm looking at my momentum chart on my 4-hour, we had positive momentum coming all through here. But then on the 4-hour chart, we had that momentum turn over. So I should have actually been looking around about this price point here, so 39.40. I should have been looking to exit as that price point moves over. Or we've had 1, 2, 3, 4, 5, 6, 7, 8, 9 extensions of positive momentum, and on average you're going to get between 7 to 9 of these positive momentum before momentum turns over. So I could have actually gotten out at 9 at this one here. So I could have gotten out at the top there, which would have been nice, which was basically the top of that push, and that would have banked that $5,000. And so that would have been around about this here. But nevertheless, we're holding in here because this is sort of a longer term trade with quite a aggressive profit target. And so, but what I'll be definitely looking at and monitoring is just how much downward pressure we get coming through here in terms of negative momentum. What I would like to see is just a small dip like this. So we've had a bit of a price sell-off. We have a consolidation. So what I don't want to see is the negative momentum. I don't want it to continue to be green, which means that we are in a, momentum has changed to being more negative or downward. I want it to move back into a red or an orange spot, which is a little dot in the middle there, meaning that we're consolidating in price, and hopefully then we get a push back up. The trials and tribulations of being a trader. Oil. Not much still happening with oil prices, and we're in a downward trend. So we've got high, low, lower high, not necessarily a lower low here, but definitely still selling pressure. But all these continuous lower highs that then get a lower low down here. It would be fantastic for all of us if oil prices would remain this low. What I don't see is that any sort of petrol decreases at the Bowser. So it's still very, very expensive to fill up your car. Having a look at the gold price, gold is staying steady. It's probably going to be sitting around about that $350,000 amount, $3,500, $3,350 mark per ounce for quite some time. And that's going to continue to consolidate. Whilst we see the S&P 500 can maintain all-time highs. So when we're looking at public stock markets and then that share price staying at sort of that all-time high or making new highs, you're not going to see both the S&P 500, the NASDAQ, Bitcoin, and gold all reach new all-time highs. What you will potentially see is a rotation out of gold towards these more growth assets, as well frothy style assets where you can get more velocity, a greater gain faster. But then as you see a sell-off in these public markets, more capital will flow back into gold. Hope you enjoyed my market scan today. If you've enjoyed this video, please like and subscribe and share this with one of your friends or someone who's interested in trading. If you would like to get a Success in Life review, I'm running a special in the 2026 new year where I'm taking on around about 20 new clients to be able to do that. So if you'd like that, it's a complimentary Success in Life review where I take a look at where you are right now, your goals and where you want to when you want to achieve them, and then if there's any shortfalls, and I can sort of start to point out the things that you can start to do to actually execute on a strategy to achieve your goals. And then if you want to decide to come on board and get a full strategic plan, then more than happy to be working with you. It's also tax season, so hopefully you moved all the money around that was needed to by 30th of June, and you've got all your tax planning strategies in place. That's it for today. Have a fantastic Wednesday, and I'll catch up with you soon. Thanks so much.